Earnings season has been our first glimpse into how many companies are navigating the current uncertainty we have in global trade. Joining us now to discuss what you've been hearing from the mining sector is Craig Hutchison, Director for Equity Research with TD Cowen. And for full disclosure on the companies covered by TD Cowen, a division of TD Securities, please see the link to the website at the end of this video. Craig, great to have you back. We're talking mining. What have you seen so far in earnings season?
Yeah, thanks for having me back on the show. So going into Q1, I think the expectation across the board was Q1 was going to be a weak quarter. A number of factors driving that really came down to several companies have ramp-ups ongoing, Capstone, Eero, et cetera. And there's some factors that are seasonal within mining, and some of it has to do with lower grades in Q1. So for the most part, the expectation is the second half of this year will be stronger than the first, and that's kind of what's played out so far. We've had about half our coverage universe report already. Most companies have kind of reported what I would call inline quarters. A couple companies like Teck, and we can talk about some of the specific names, are already kind of guiding to the lower end of their guidance at one of their core assets called QB2. Taseko last week kind of lowered their production guidance a little bit. But for the most part, most of the companies are kind of coming in line with our expectations. Again, we got another week or two to go here in the earnings season, so it's not over. But by and large, the companies are sort of delivering as expectations.
Now, the issues you're talking about sound like they're specific to the industry and specific to the cyclicality of the industry. When we think about tariffs and the impact there, are we getting any idea from these companies right now when they start talking about what it looks like going forward, if that starts to play into the story at all?
Yeah, so tariffs obviously, at the top level, it's a headwind to global growth, right? And in the base metals space, when you're talking about copper, iron ore, less so uranium because there's some structural issues there, but copper for the most part, I mean, it's heavily dependent on global GDP, right? So obviously the talk on the tariffs is having an impact, I think, on demand. At the same time, demand has been fairly strong through China, through Q1, and I think that will continue. And there's some factors we can talk about that, but the companies themselves aren't really experiencing major tariff impacts at this point, right? Because what Trump is proposing is tariffs on China. Most of the product that's produced, like if you're talking about a company like Lundin or Capstone, that material is actually shipped over to China. And so they're not really exposed to those tariffs. So they don't have a lot of influence. There's a couple companies, like if you have a US asset, like Teck has Red Dog in Alaska, and Capstone has one in Arizona. Those could be potentially exposed to some tariffs. At the moment, Teck has been pretty emphatic that there's no major tariff issues at this point. But it could start to impact costs, because if you're a U.S. asset importing materials from China that are now subject to tariffs, your input costs could go higher. But at the moment, most of the companies seem to be navigating the tariffs quite well.
So apart from that issue, you mentioned some interesting things about the quarter that we've seen. What really stood out for you in a few major themes, whether it's company specific or industry specific?
For the most part, I think a lot of companies have actually realized better than expected revenues. So provisional pricing, we saw some prices of copper went kind of down into the quarter year end last year. So we've seen a bit of a rebound into Q1. So some of them recorded better than expected revenues. So that's been a bit of a top line beat. Again, there's been a few seasonality things, and Teck in particular had some issues around tailings dam lifts at QB2 that's caused some issues, but nothing really has kind of stood out with regards to the quarter at this point. But obviously it's going to be back-end weighted in terms of production.
Is there anything going forward for some of these companies? If we think past the tariffs, we just think what the landscape looks like for the rest of this year. You mentioned obviously global GDP, and when you talk about the base metals, are there any other big issues for the industry right now?
There's talk about the Section 232 tariffs in the U.S. So, President Trump is proposing bringing in tariffs on copper imports into the U.S. Effectively, what he's trying to do there is to stimulate a U.S. domestic copper industry. The U.S. right now relies quite heavily on copper imports. So I don't know if it's the best strategy out of the gate in terms of stimulating the industry. The issue with the U.S. is they don't actually have the refining capacity. So they produce concentrate. A lot of that gets shipped out of the country and refined metal in places like China or Europe, and then brought back into the country. So I think there's other ways around it to address those issues. One of them would be tax credits or assistance in permitting that the U.S. government could do to sort of stimulate their industry. But right now they are looking at putting in potential tariffs on imports into the U.S. And what that's done is it's actually created a spread between the LME exchanges and the COMEX exchanges right now, and that's about a 15% spread right now, which is, I think, what people are assuming those tariffs are going to kind of settle in. But if those tariffs were to go away, if the threat of those tariffs were to go away, you could see the price of copper pull back right now, because there's been a lot of metal that's moved into the U.S., and then obviously some of the other exchanges have been fighting for material, so it's created a bit of dislocation between the different exchanges. And if that were to go away, then I think you could see copper come under some more pressure.
I think you mentioned uranium earlier. What's going on with that space? I mean, there was a lot of excitement around it for a while in terms of people feeling better about nuclear, and then saying AI is going to need all this power. And I feel like other things have pushed uranium out of the spotlight.
Yeah, so if you go back in last fall, when the announcement with the Constellation Energy and the Microsoft deal of bringing back a 3 Mile Island, sector was really on fire. And leading into the last few months of the year, the uranium stocks were up around 20%. But meanwhile, the spot price for uranium was actually declining. It was down 10% since the 3 Mile Island announcement. Since year to date, I mean, there's been some factors, obviously, that have influences on the macro level. But when we had the DeepSeek moment, a lot of the multiple expansion that was in the uranium stocks came off the table, right? And the idea being that these chips are more efficient and they're going to need less power, and so that whole AI trade started to unwind. You've also seen weakness in the spot price for uranium, and part of that has to do with there's been some discretionary selling in the spot market. The Kazakhs had a state-owned fund that they unwound late last year. I think some of that material probably crept into this year, so there just was a lot of selling into a fairly quiet market. We have seen the last 2 weeks, the uranium price has started to rebound. We could talk about some of those mechanisms why it has, but it's starting to kind of finally move in the right direction, and the equities have rebounded a little bit as well.
What is behind the rebound?
So there's a thing called the carry trade, where traders will purchase material in the spot market and they'll sell it into the term market, and that market was kind of absent for a few years. But because the spot price was so far below the term price being around $80, and spot price that got down to 63, 64, so it's a pretty wide spread between $15 and $17. So you have seen traders back in the market, purchasing material in the spot market and then delivering those into term contracts, and that's provided a bit of a floor for uranium as well.